Everyone says Gen Z is bad with money. But the truth is, Gen X might be the most misunderstood generation when it comes to money. What if I told you their habits aren't random? They're built on fear, survival, and simple math. In the next few minutes, you'll understand why Gen X saves the way they do, why they avoid risk, and why their decisions look completely different from younger generations. And more importantly, whether their strategy is actually smart or quietly costing them money. Let's start with a simple comparison. Imagine two people. Person A is Gen X. Person B is a modern investor. Person A saves money every month, keeps it safe, avoids risk. Person B invests money, takes calculated risks, focuses on growth. At first glance, Person B looks smarter. But here's what most people don't realize. Gen X didn't grow up in the same world as you. They saw high interest rates. They saw job instability. They saw entire markets crash, not once, but multiple times. The dot-com crash, the 2008 financial crisis. For them, money wasn't about getting rich. It was about not losing everything. So their rule became simple. Protect first, grow later. Now let's bring in the math. Let's say a Gen X person saves $500 every month. They put it in a bank. Safe, predictable, around 2% annual return. After 20 years, they end up with about $147,000. Not bad. Feels safe, feels stable. Now let's take the same $500, but instead of saving, we invest it. Average return around 8%. After 20 years, that turns into roughly $295,000. That's double. Same money, same time, completely different outcome. So the obvious question is, why doesn't everyone invest? Why didn't Gen X? Here's where psychology comes in. Because numbers don't tell the full story. Experience does. Imagine you invest your money and suddenly the market crashes. You lose 50%. Half your wealth, gone. Now here's a small piece of math most people ignore. If you lose 50%, you don't need 50% to recover. You need 100%. That's a brutal reality, and Gen X lived through that. So their brain adapted. Instead of asking, how much can I gain? They started asking, how much can I lose? And that one shift changes everything. Let's talk about something even deeper. The hidden cost, peace of mind. For Gen X, money is not just numbers on a screen, it's security, it's stability. It's sleeping peacefully at night without worrying about market crashes. So even if investing gives higher returns, it also comes with stress, checking prices, watching losses, feeling uncertainty. And for many Gen X individuals, that stress is not worth it. Now here's where it gets interesting. This safe strategy might actually be risky in a different way because of something called inflation. Let's say inflation is around 3% per year. If your money grows at 2% in the bank, you're actually losing value over time. Slowly, quietly, invisibly. So even though it feels safe, you're losing purchasing power every single year. Now compare that to investing. Yes, it goes up and down. Yes, it feels risky. But over the long term, it usually outpaces inflation, which means your money actually grows in real terms. So now we have a dilemma. Option 1, stay safe, low risk, but slowly lose value. Option 2, take risk, face volatility, but build real wealth. This is the exact conflict Gen X faces, and honestly, both sides make sense. Because it's not just about math, it's about what you've been through. If you've seen money disappear overnight, you value safety more than growth. If you've grown up in a stable, opportunity-filled world, you're more comfortable taking risks. So who is right? Let's break it down simply. Gen X strategy. Low risk, high stability, lower returns, strong emotional comfort. Modern strategy. Higher risk, higher returns, requires discipline, emotionally challenging. The truth is, Gen X is not bad with money. They're optimized for survival. They built their habits in a world where losing everything was a real possibility, and those habits protected them. But those same habits can limit growth today. So what's the smart approach? Not extreme saving, not extreme risk. Balance. Save for security, invest for growth, understand risk, but don't let fear control every decision. Because in the end, money is not just about maximizing returns. It's about building a system that works for your life, a system where you feel secure and still move forward. So next time you see someone from Gen X being too careful with money, remember, They're not being irrational, they're being shaped by experience. Now I want to hear from you. Do you think Gen X habits are smart, or are they outdated in today's world? Drop your opinion in the comments. And if you like content that explains money using real logic and simple math, hit subscribe, because most people don't see this.